Imagine this. You're 25 years old, and someone tells you that the single biggest thing you can do right now is invest just $5,000. You probably think they're crazy, right? $5,000 is a lot of money when you're young. And besides, you've got time to invest later, maybe when you're making more or when your life settles down. Here's the problem with that thinking. You're leaving hundreds of thousands of dollars on the table, and most people never realize it until it's too late. Let me show you why. Compound interest is the concept of earning returns, not just on your initial investment, but on all those returns stacking on top of each other, over and over again. If you invest $5,000 at age 25 in a diversified stock portfolio returning roughly 10% per year, which is the historical average of the stock market, that money doesn't just grow by 10% once. It grows by 10%. Then you earn 10% on that larger amount, and then 10% on that even larger amount, year after year, for decades. That's compound interest, and it's the reason Albert Einstein supposedly called it the eighth wonder of the world. Now here's where it gets real. Let's say you invest $5,000 at age 25, and you never add another dollar to it. By age 65, that $5,000 has grown to approximately $872,000. That's the power of 40 years of compounding. But what if you waited? What if you thought, I'll start at 35 instead? That same $5,000 starting at 35 grows to roughly $219,000 by age 65. You lost $650,000 just by waiting 10 years. That's not a typo. The difference between starting at 20 and starting at 30 is literally hundreds of thousands of dollars, and all you did differently was wait a decade. And here's the counterintuitive part that nobody talks about. The money you invest early does almost all the heavy lifting. If you invest $5,000 at 25, the stock market itself generates about 8% of that $2,000 final amount. Your initial investment was less than 1% of your total wealth. The rest came from compound growth. This is why time is so much more powerful than timing. You don't need to pick the perfect stocks. You don't need to catch the exact bottom of the market. And you don't need to have $1 million to start. You just need to start early and let time do the work for you. So how do you actually start? Step 1. Open a brokerage account. That's just an account that lets you buy stocks. You can do this in literally 15 minutes with apps like Fidelity, Vanguard, or Charles Schwab. Step 2. Fund that account with whatever you can afford, even if it's just $50. Step 3. Invest in a low-cost index fund, or ETF, that tracks the entire stock market, something like the S&P 500. This is the basics of the stock market, and exactly how beginners should start investing. You're not trying to beat the market or pick individual stocks. You're literally just buying a small piece of the entire market and letting it grow. Most people overcomplicate investing because they think it has to be this complicated, mysterious thing. It's not. The reality is that the stock market for beginners is incredibly simple. Buy diversified, low-cost index funds, hold them for decades, and let compound interest turn modest investments into life-changing wealth. This passive income strategy works because you're not relying on picking winners or timing markets. You're relying on the fact that historically, the economy grows, companies become more valuable, and patient investors get rewarded. Here's my bottom line. Starting to invest at 20 instead of 30 doesn't just give you 10 extra years of growth. It gives you $650,000 extra dollars. That's not small. That's not something to think about later. The single best time to plant a tree was 20 years ago. The second best time is today. The same thing is true for investing. Whether you're interested in how to make money online, passive income ideas, or just building genuine wealth through the stock market, the first step is always the same. Start now, with whatever you have, and let time and compound interest handle the rest. So if you found this valuable, please like and subscribe. I break down personal finance and investing tips for beginners every single week, and I keep it real without the jargon. And remember, this is educational content, not financial advice. Always do your own research before making investment decisions.